Thank you so much for joining us today, Mia. Firstly, let's just take a look at kind of general market moves, sector moves. It seems that the sentiment around resources stocks has improved somewhat. Are you feeling a little bit more confident that you can get into these stocks and they're not going to fall tomorrow, basically?
Well, we've been getting into these stocks for quite a while, and we haven't been getting into any of them worrying that they might fall further, because that's what we saw whenever, ever since Anglo actually hit the mark below 300. They were a buy to us, and obviously there were earnings and news that came through and the market deteriorated during that time, which makes them now a buy at a much lower level. But they've been a buy for quite some time, and it is nice to see the share price picking up again of all these resources.
Yeah. Let's talk about all the earnings that have been coming through. Aspen delivering once again to shareholders. Headline earnings per share 636.2 cents, up 22%. The stock, in fact, coming back slightly today, just 140 rand, but we know the stock has been one of the best performers. So to break down the numbers for us, what really stood out for you?
Well, like you mentioned, the stock has done very well. The share price is up by over 45% year to date. The company positioned very well for growth going forward. We saw that acquisition of theirs where they bought that Sigma Pharmaceuticals in Australia turned out to be a very big driver for them on the earnings side.
You're basically doubling Asia Pacific earnings.
That's right, that's what happened. And they're very positive about going forward about the Latin American area. There they already have exposure in Brazil, Venezuela and Mexico, and they're looking to actually increase the exposure there, and they see that as the big driver going forward for them as a company.
Price-wise though, because that of course always the question with the likes of Aspen.
Well, with them, they're not cheap to get. They're on the more expensive side, trading at a P of around 22 times, which is quite a bit higher than some of the other two, or both the other two pharmaceuticals in their sector. For us, I think Cipla still offers the best value there and probably the best growing opportunity.
Why Cipla though? Can you just, kind of key reason that you'd buy Cipla over Aspen?
Well, very much valuation driven in this sense. Both of these companies, actually the whole sector, will benefit from the fact that all the generic drug makers will benefit from the fact that most of the best-selling generic drugs, that's around $100 billion worth of generic drugs, lose their generic patent protection over the next 3 years.
Yeah.
So that is probably where the biggest driver for the sector will come in.
And Cipla, of course, as you say, a little bit cheaper there, so more attractive at this point. Let's talk about MMI, because as speaking to the CEO earlier, delivering 12% return in terms of core headline earnings growth, a special dividend, so they're putting that capital that they've had on the balance sheet to work, giving back to shareholders. But is that enough to make you buy into the new MMI story, which is of course the Metropolitan and Momentum insurance companies which have merged?
Well, I think the biggest buyers of MMI over the last year or since the merger were people who were looking for a high dividend yield. It was well known that the company had a lot of cash on the balance sheet, and everyone was banking on the synergies that would come through. Up until now, the merger as such for the synergy side has been a little bit disappointing.
They're saying 200 million rand in realized annual savings so far, and they're on target to reach 500 million rand by 2050.
That's right. In any case, we have a merger with so many restrictions as not being able to let go of some of the workers. It is difficult to realize the whole value of that merger. On the retail side, 62% of the business roundabout is Momentum Retail, and that is on a higher earning investor who they actually target there. The margins are very small, and if we look at this business over the last couple of years, the margins in this business have actually been under pressure and coming down significantly, but they have managed to push up the dividend, and paying special dividends now for the last two results announcements has been very, very good for them. I mean, they're trading at a dividend yield, if you include that special dividend, of over 8%. Now, many pensioners would be happy to hold that just for that sake. So depending on going forward, if they'd be able to manage, I know the other strong point for the company is the medical scheme side, where they're very in tune or tapped into the government's medical scheme, the GEMS.
Benefits,
that's right.
Doing very well.
So, and that's for them as a big driver there, also for the earnings. So if they can maintain that, if they can try and maintain their margins, they're also talking about reshuffling the way that they're reporting to make it look a little bit better, to I wouldn't say look better, but actually suit the company more. I don't think the way they're reporting at the moment suits them as a company is so good. So it might, pick up on that side and look a little bit better for them. Not a bad company, but probably not one of your ones who's going to shoot the lights out in the next couple of years.
Well, certainly a stock, or a company rather, that is shooting the lights out when it comes to top line revenue growth. That's what you want to see. You want to see that they're selling more products, basically. Demand for products is good. EOH, I mean, revenue growth 50%, 3.6 million rand. What are your thoughts on the prospects? A lot smaller, of course.
Well, EOH is one of the darling small companies in South Africa. It's done extremely well for investors over the last 10 years. Over the last 4 years, they've grown their revenue at around 40% year on year. And that is amazing growth. I mean, no one thought they'd be able to sustain it a long time ago, and they have actually been able to. They have great clients. The people that they offer solutions to is so broad-based that it includes nearly everyone in South Africa, from government entities to mining to retailers to basically everyone that's listed on the JSE. So and that driver helps them also in the way that such a big part, around 50% of their earnings, is an annuity type of earning. So this company is a strong company, and I wouldn't underestimate EOH, but again, on the more expensive side if we look at it in the sector.
Okay, so of course you're seeing that stock, of course, responding to the strong growth we've seen. Thank you so much for coming through today, Mia Kruger, Portfolio Manager at Kruger Internasionaal.